Good morning, everyone. I hope we're all doing great today. We know that today is a big day in the markets. We have the US CPI ahead. Good morning, Gift. Hello, Lemuel. Hi, Ahmad. You're most welcome to today's market snapshot, and I'll be taking you through the snapshot today. Yeah, so to start things off, okay, so to start things off, we're going to look at the economic calendar that we have before us. Hi, Kevin. You're most welcome. Yeah, so of course, the big event for today, we have the US CPI, which is coming in later, and we're going to have quite a good discussion here. But of course, we have to make sure that we manage time. Hi, Jack. Hi, Kevin. You guys are most welcome. Yeah, so of course, in the morning during the Asian session, we had the interest rate decision by the Reserve Bank of New Zealand. Of course, we saw that they kept the rates unchanged at 5.5%. Then, of course, earlier, of course, in the week, I think you saw that we had data that came out from China that was indicating that inflation is starting to decelerate in China, and we had actually a negative figure there. So it's likely also an indication that we might have an interesting digit today, as we'll see as we proceed. Then, of course, right 1 hour before US session, we are going to have the US CPI coming out. And of course, that statistic is going to be very, very interesting for quite a number of assets. For those of you that trade the majors, those of you that are trading gold, silver, BTC, all these other US and Euro indices, there's going to be a bit of movement. So to put things into context, especially for the US CPI, we know that the long-term target for US inflation, morning, Timothy, the long-term target for US inflation, yearly target is 2%. And of course, markets are expecting deceleration of that inflation to 3.1%, as you can see there. And of course, just a moment. What have I done here? Let's see. Okay. Yeah, so markets are expecting the inflation to reduce to 3.1%. And of course, the reason why we have been having an increase on the major pairs like the Euro USD, the AUD USD, right from Monday, the pre-US CPI move has been a bullish one. And that's, of course, the reason why we are having the indices rising even in Euro session. We're also having Euro USD, AUD USD, and all these different other currencies rising in the US session. So, of course, the focus for today essentially is the CPI year-over-year digit, which is showing a decline, a potential decline from 4% to 3.1%. Then, of course, we also have the core CPI month over month, which is showing the potential decline of 0.4% to 0.3%. Yeah, so majorly, of course, markets, of course, the reason why we are having the pre-US CPI move upwards is largely because of a potential decline. So, of course, we are going to look to see what happens with the US CPI year over year. If we get a decline below 3%, and of course, even a decline that goes even up to 2%, which I don't anticipate, most probably we're going to have a continuation on the upside. Of course, if the CPI comes in with a surprise of maybe a solid 1%, most probably we are going to have a reversal of the upside that we are getting on the risky assets. So just quickly, I just want to show you guys something here that might be of importance to you all. Let's see here. Yeah, so we're just going to quickly look at what the banks are anticipating. And of course, as you know, the banks obviously usually indicate to you what essentially they're expecting. Now, most of the big banks across from the US to Europe are expecting that inflation is potentially going to reduce year over year. Most of them, they have an average consensus of a potential decline in year-over-year inflation. However, we are seeing, especially with some of these ones like the ANZ and Commerzbank, they are expecting that US inflation month over month is likely to increase. Then, of course, additionally to that, we also know that the Fed has been trying to ensure that the wage growth does not increase in the US. So, of course, you know, even last week, the reason why we had the sell-off that we're having on most of the assets, especially the US indices and even GBP USD, AUD USD, and some of the others, it was largely because of that increase in the ADP. Yeah. So of course, the other thing that we also have taken into account is if the inflation does not surprise majorly to the downside, then of course we might have risky assets continuing to sell off, rather reversing to sell off back to where they were from last week after we had NFP, rather ADP. So that's something to take into account. Yeah, so when we look at some of the banks like Credit Suisse, we are seeing we expect core CPI to step meaningfully lower to 0.2% month over month. Then they're expecting the year-over-year reading to increase potentially to 4.9%, with headline inflation coming in at 3.1%. ING is looking at a potential increase to 3.1%, which of course has been the target. TDS is looking for a potential increase to 4.9%. Deutsche Bank also, they are looking at a potential increase to 4.6%, as well as also to 5%. So of course the average is a potential increase of a solid 1%, and of course a potential decline to 3.1%. So of course the CPI is going to be the major news that we have, or economic news that we have this week. So let's just cross over to the charts and see what we are seeing on the charts. So now, away from the calendar, what we have been seeing with most of the assets, let me just start, I think, with gold. Yeah, so the upside that we have been having on gold has been, of course, partly a relief rally, but also, Soga, you're saying, which website do you get information of what the banks are predicting? Let me just share that with you. Just a moment. Let me just get that to you. Yeah, so the bank forecasts are very important because most times they will indicate to you where we are likely to, where the kind of statistics we are likely to get, but they should be used essentially. Yes, Soga, I've shared that with you. I think you should be able to see it in the chat for the live. Okay, so over quickly to gold. Gold on the daily, of course, as we discussed last week, guys, gold has been on a downside momentum. The reason why we saw the upside on gold from last week on Wednesday, and of course NFP on Friday, was because the ADP digit that we got was strong. We got a reading of 497,000, which of course was a bit heavy, and that's the reason why we had that initial decline. If you remember this decline that we had on gold, this one right here, okay? Now, when we got ADP came out, rather NFP came out a bit softer. And of course, the reason why gold has failed to continue its decline, first of all, was because of the soft NFP number that we got. Then, of course, secondly, it's also because of an estimated, yes, hello, Dickens, you're most welcome. The reason why we're having the upside for gold from Monday to even today, EU session, is because of the anticipated decline in inflation. Okay, so that's the reason why we are having gold moving to the upside. So of course, I expect that if CPI disappoints to the upside, maybe if we have a US CPI year-over-year reading, we are most probably going to have gold going back into this descending trend line. And of course, you know that the descending trend line has been respected up until this point when we had the soft NFP digits. Okay, so we are most likely going to have gold going back into this zone right here. And of course, if we break this ascending trend line right from the low that we had at 1895, and of course we know that there was a really big bearish order block there that of course was not able to overcome the demand. That's the reason why gold had that, you know, sharp upward movement. So of course for gold, first thing is of course because of the soft NFP digits that we had on Friday. Secondly, of course, because of the anticipated decline in CPI for the US. So of course, the momentum largely will depend on what we have in the afternoon. If we have a disappointing CPI number, then most probably gold is going to go back into that descending level. And then of course, obviously, try and retest this low we had of 1895 that we had when ADP was released. So of course, if gold, if CPI surprises to the downside, likely then gold is going to continue its upward trajectory all the way up to these resistance points right here. The other thing, of course, that you also have to keep an eye, guys, is keep monitoring what happens with the US 10-year bond yield, as well as also the DXY. So if DXY continues to show relative strength, likely also we might see gold, you know, having a strong reversal. And of course, you can see that gold has been having a kind of pattern it's forming here. You know, it's been having that upward pattern, but this is likely also that it's also a bearish flag. So it's like the gold, when it breaks this ascending trend line, most probably is going to continue the downside. When we cross over to the JPY pair, so JPY pairs have been moving in disalignment with the other risky assets. And that's largely because Bank of Japan seems to be coming to the end of its easing cycle, which it's been having for quite some time. And of course, it has not yet indicated when that is going to happen. However, the market seems to be already anticipating that they might have a bit of, you know, a slight sort of like reduction of liquidity that they're having in the market in Japan. So just to put things into context, especially for GBP JPY was up by 6% from June to July, 6%. It was up by a really big digit. And the reason why we are having immediate reversal when we have just started July is likely because it's just trying to cool off from the upside that it had, you know. The other thing, of course, is we shouldn't fight the trend. As you can see here, it's been respecting this channel of declining. Now, I have the Keltner channels on there, as you can see. The purpose for that Keltner channel is that it shows you when you're having a lot of price action appearing below the lower channel, it's an indication that price is likely to continue moving to the downside. That's why you're having GBP JPY respecting that channel all the way. So now, key levels to watch, of course, we are waiting for price action to reach this level right here, which was last seen not a while ago, just 21st of June. If we have a break, hi Kelvin, if we have a break of this particular level right here, we might see GBP JPY continuing its downside momentum all the way to that level of 178.840, which was last seen on 16th of June. Yeah. So if we cross over to the indices, for those of you that are trading indices, you might find this interesting. We are going to first start with NASDAQ. So NASDAQ, on one end, of course, NASDAQ has been having some really good momentum to the upside. And of course, NASDAQ also is up 37% year to date. And that is a good indication that NASDAQ, by far and large, is showing really strong momentum to the upside. The other thing that we also need to put into context is July is an interesting month for the indices because most of the stocks are going to start releasing earnings. So it's because of that that we might have a bit of whipsaws happening on the indices. So we might not have a bit of organized movement. So of course, for the big stocks, that is the FANG stocks, Facebook, Apple, Google, their earnings do not come until the end of the month, towards the end of the month. So now to talk about CPI for today, key levels to watch, of course, as you can see, NASDAQ has not been respecting this descending trend line. And of course, the reason why we had this upward movement from the ADP lows of last week is largely because of the pre-US CPI move, which is because of a potential decline in inflation in the US. That's why we're having this upward move that we saw here. So today, if CPI surprises to the downside, we are going to take out this level very nicely, and we shall have continuous movement to the upside. NASDAQ on the long term is chasing this level right here, okay? This one right here. It's going to break through this level, which was last seen in just March. So it's not a level that is very hard for NASDAQ to take out even today if we have CPI surprising to the downside. And again, if CPI surprises by a decline of between 1%, rather that's the CPI year over year. If it surprises to between 1% to 2%, most probably NASDAQ is going to continue all the way to this level here. And of course, another catalyst for this potential move upwards is also going to be because of great earnings by the big tech firms, as well as also good forward guidance. If we get good forward guidance from the big companies, especially Apple, Google, and Facebook, we are likely to have a move to the upside for NASDAQ. Yeah, so Trapskid, you're asking about DXY. Okay, so for DXY, DXY, of course, by far and large, it's been in consolidation for some time. And the reason for that, of course, is because we got a soft ADP, rather a soft NFP number last week of 200,000 jobs, payrolls. And of course, and again, even now, we are seeing DXY continuing with its downward trajectory. And that's the reason for that, of course, is also that markets are anticipating a potential decline in just a moment. As I share with you this would really help you. Let's see, just a moment. Okay. So Trapskid, I think you should be able to see DXY shortly. It's going to be shared with you in a moment. Okay, so for DXY, when you check the regression channel that we have over here, we are seeing that it looks to be in a downside move, and it's likely to test this downward regression channel level of about 100. And of course, the catalyst that's going to help with that is if US CPI continues moving. If US CPI comes out much up, if it surprises to the upside, we're going to have DXY testing this lower regression channel. If it fails to break this level, then of course, ultimately, and of course, if the CPI surprises to the downside, rather to the upside largely, then the DXY is likely to continue to this level here, which we last saw in November. So first, by far and large, DXY is showing relative weakness ahead of CPI news, and it's likely that if that continues, we are going to see DXY, breaking this level that we last saw somewhere around April this year. Yeah. So just to finish things up, let's go back and see what is likely to happen for. I hope that helps you, Trapskid. Let's go quickly and check out what's happening with the Dow. Okay. So for the Dow, again, the Dow Jones, it's been having downside momentum. That, of course, has been because of the ADP number that we got last week. But when we got a soft jobs number on Friday, it of course failed to break this level right here. That was early during Asia session Monday, and it has held this level right here where there was a strong bearish order block there, and we had price moving to the upside. So this upside that we had on Dow was largely because of anticipated decline in CPI. So the markets are already pricing in a potential decline. And of course, when the news comes out at 3:30, we are likely to see either Dow having a reversal back to this point. If it takes out this level here, most probably this level will not be hard for it to take out. And of course, this is going to be determined by US session. We have to see what happens during US session. And again, you can see we still have this as descending trend line to take out. If we break this descending trend line that we're having from a week ago, 2 weeks ago, then Dow is most probably going to see new levels to the upside. And again, like I've mentioned earlier, we have banks that are going to receive earnings. Hello, Okomo. Banks are releasing earnings this week. We have JP Morgan, we have Citi, and a few other banks. So of course, it will also determine if the banks have great earnings and good forward guidance, then we might be having Dow, taking out this top level here of this descending point right here at 34,579. So I think by far and large, guys, it's really just a wait and see game as we anticipate and see what happens later with our US CPI readings. And of course, we shall also be eager to see how the inflation readings are digested by the different Fed speakers who are going to be coming in to speak later in the week. So I think with that, guys, I think by far and large, that's really what we are seeing today. Risky assets are having upside. If you're checking on the calendar, you're seeing GPUSD, Euro USD on the market watch. All of them are showing upside because of anticipated decline in the US CPI. So let's wait and see at 3:30 what goes on and happens. Please give a review for Euro USD. Okay, so for Euro USD quickly, just in 1-2 minutes as you wind up, it's also been moving to the upside. And of course, it took out this descending trend line that we had on the H1. As you can see, this level right here was taken out. We took it out on Friday after we had very soft jobs data. And of course, you can see that this movement that we have been having upwards is because of an anticipated decline in US CPI, which of course has been giving a dollar, subdued weakness. So again, you can see, guys, Q3 target for Euro USD is above 1.14, 1.15. Q4, banks are looking to see that Euro USD closes above 1.17. So by far and large, Euro USD is having a very, very strong upside momentum. Yeah, so of course, for CPI, we need a thorough soft reading for us to get us failing to break this level here. If we fail to break this point right here, then of course we are most probably going to see a potential move upwards to these levels right here. The other thing, of course, is where USD is right now. It's at a very, very big discount because before the Russia-Ukraine crisis, Euro USD was trading upwards to 1.17, 1.12, somewhere around there. And of course, the reason why we're having USD having that upside move is likely because the markets are already, pricing in potential, upward movement. And of course, banks are also, having a large majority of their positions for the long on this particular pair. So I think that really helps. We shall see what happens later in the week, and as things progress later in the day when we get data 1 hour before US session. That's the US CPI for June. Okay, guys. So I think that's it for today, and I wish you guys an amazing trading day today as well as in the week. I'll see you guys next Wednesday for another market snapshot. Yeah.